morning, everyone, and welcome to this week's Hedge Plus Q&A, or as we like to call it, the Grain Gauntlet. As always, 5 questions from clients and potential prospects. I'm Josh. This is Patrick. You ready to go?
I'm ready.
All right, here we go. First question. What is the single most powerful market mover in the grain market outside of a black swan event?
Ooh, good question. Pretty simple. It's weather. The weather forecast will drive markets crazy, as you all know, during the summer. Biggest volatility, biggest moves up and down are weather related, whether it's thunderstorms that give more rain than what we expected and lower drought potential, or we have long-term drought. It's weather. So in summer, in the northern hemisphere, the key ingredient to pay attention to is weather.
Right. Yeah. In writing this morning, couldn't help but notice that South America is probably in the midst of its best stretch of weather it's had this year, and right now the markets are really struggling a little bit, and probably has a lot to do with that.
Yeah, and the safina crop's just being planted, so it's getting moisture off to a good start. It is late, so there's going to need really good weather in April. That's the key weather month for the safina crop, is April.
All right. Next question. With likely around 94 million acres projected at the end of this month and another big round of tariffs on the horizon for April 2nd, is there hope for the corn market short term?
Yes. Weather. If we have any kind of adverse weather for the safina crop, corn prices will rally. We are at a very low price right now. So if we were I would be concerned. But being 50, 60 cents lower and below the cost of production, yeah, there's all kinds of hope for higher prices. And that will be based on demand increases. Again, we saw that when we're down to stinky prices in the fall, we rally. We didn't rally because we lost bushels. We rallied because demand came in. The dollar is down. That helps corn exports. The world still needs corn. We're still the major exporter right now till the safina crop comes. I expect demand to pick up at this price.
Okay. Which is more useful, using technical analysis or fundamentals as tools for marketing grains?
Neither, and both. Funds pay attention to technicals, but big time technicals. Weekly moving averages, 200-day moving averages, stuff like that. You got to pay attention to the technicals to see where buyers are likely to come in or sellers are likely to come in. You also have to pay attention to fundamentals, because the biggest mover in the fundamentals is weather, right? If we have weather forecast could drop production significantly, that changes the complex. Changes the price potential tremendously. So you got to pay attention to both. Third, that we have learned to pay attention to is participants. Who's getting long, who's getting short. You got to add all those three together and analyze it and come up with a plan to optimal all three.
Right. Yeah, speaking of the technicals, seems like on the overnight and a lot of talk this morning, we're around those 100 and 200-day moving averages. But those only hold for so long. If the fundamentals aren't there, technicals just are kind of a short-term support.
Right, or resistance. Right, in this case is resistance with made corn 100 days sitting right about 465. That's right about where we are. Could new sellers come in if we can't break that? Sure, and that could push us down short term.
Okay. All right. How much money should I plan on funding my trade account with so we can be successful?
Wow, that's loaded. This is the major problem, I think, with farmers not having as much success as they may want in hedge accounts. We have a lot of people coming to us that have been beaten up in hedge accounts, taking a lot of risk and not putting a lot of money in, and losing that money, and then say, I don't want to go through that again. I get that. It's best to be upfront with your market advisor on what you can afford. If you want a good dollar note, 5% of the value of the contract at the time you enter the trade. So 5% of corn at 450 is 5,000 bushels. Do the math, it's like 20,000 bucks. 5% comes in at about 1,000 bucks, I believe, something like that. Anyways, bottom line is about 5% of the value of the contract's good. More important than the amount is that your advisor know this is what I'm budgeting for the year. If you let the advisor know that, he can help you measure risk and put on the appropriate number of bushels to hedge or to buy back, and the appropriate amount of protection so you don't go through that quickly. I think communication with the market advisor is the key to success in hedge accounts on what your risk tolerance is. You guys don't like to tell us that because then you think that's what he can lose, but in reality, that's what we could budget off of. So if we want to margin a full amount, that is stupid. So we put 10,000 in, I'm not going to have margin requirement of greater than 3,000 to 5,000. So you got to be able to handle the ups and downs. So honesty, openness with your marketing advisor is the key. That's really how much.
All right, sounds good. And last question this week. This one is from a prospect. I took this one myself, so I'll let you answer first, and then I'll share what I told him. So the question was, what makes you guys different from any of the other farm marketing companies out there?
We're a small firm that's been around a very long time. I have had many people that have tried to work for us and haven't made it because we have super high standards. We have great one-to-one relationships with our farmers. My goal and the company's goal is to be like in the office with you when we call, right? So that I'm on a phone call with a client, I'd pretend I'm sitting next to him and talking to him about his business. We know how serious this is. This is how it affects what you guys and gals get for a bottom line. If we don't do a good job for you, you're going to get less income than your neighbors, and your families that have less money to spend. This is a real thing. So the development of a personal relationship, one-to-one, where we're working for you just like we're sitting next to you on the farm.
All right. I'll give him a short version. I would say give a much longer answer on this, but I said that we only work with farmers, so we maintain a narrow perspective where our interests are not split. We have a narrow focus. We only work with, we market grains and livestock. We're not splitting our time looking at other things, metals and other commodities. And as a collective, that really helps us, to catch everything that's going on. That narrow focus really helps us a lot. And the last thing is that our decision making on cash sales centralized with you, our owner, as the final call. And obviously everyone's input is there, but you're the one with the most experience and the expertise, and you got to have a single person with the guts to make those tough decisions, and that's what we have here.
Yeah, cash sales got to be willing to be on a chopping block, and somebody has to be responsible. As far as, you mean we don't work with buyers of grain? How can you do that? How can you work with buyers and sellers at the same time? That's a really big point, Josh.
Even when, let's say you think I'm starting the market, right? And what's the difference if I'm passing that advice on to which side? Well, it's the feedback you get. If you're talking to farmers, you're talking to buyers and grain elevators. Their feedback can sway your thoughts and your opinion, and there's no way that can't leak through. So having a singular perspective, strictly from the producer's perspective, really helps us out a lot, I believe.
Well, we are aware what the other side is doing.
Exactly. Right. All right. Well, that's it for this week. Thank you, everybody. And as always, feel free to note the email at the end of the video if you want to send in a question of your own. And we'll talk to you again next week.
Great questions. Thanks. Had a great week.
Thank you.